We have an excellent panel here to guide us through the various protocols that shape the envisaged single digital African market. And we have the panel will be moderated by Ingo Borchert, and he's a professor of economics at the University of Essex. And at
Sussex, not Essex.
Sussex, sorry. And he's also a deputy director of the Trade Policy Observatory and a member of the leadership team at the Center of Inclusive Trade Policy. He has done path-breaking research on trade and particularly services trade. I appreciate very much his work, and he's also created methodologies and data repositories, so the rest of us can also engage in rigorous empirical research on services trade. So Ingo, the floor is yours, and good luck.
Well, thank you very much, Hildegun. It is a real pleasure to be moderating that webinar on one crucial aspect of the AfCFTA, which is really how different parts, as Hildegun was saying, of the agreement fit together, and how they can be seen as stepping stones towards the ultimate goal, which is a successful establishment of a single market, a single digital market, as it were, across Africa. I think the motivating observation here is that the stakes are really high. Just to put this in perspective, a recent, meaning 2022, World Bank report actually done in collaboration with the AfCFTA Secretariat estimates that the agreement, if fully implemented, could raise incomes by between 7% and 9% by 2023 and lift up to 50 million people out of extreme poverty. Now, the new angle here, which underpins these estimates, is that the study also accounts for additional benefits of FDI investment from both within and from outside Africa that agreement is expected to generate. Now, that if is a big if. And of course, we are a far cry from sort of full implementation. And some of these protocols that we are going to discuss today only exist as draft texts. But still, I think it really is worth thinking about that. And it is therefore worthwhile to look at the 4 protocols of the agreement that aim at regulating key frontier areas of the digital economy. That is services, digital trade, intellectual property, and intangible assets, as it were, and competition policy. And so we have 3 speakers today with unique expertise and insights in these policy areas. They will discuss how these 4 protocols can contribute to achieving the stated goals of the AfCFTA, such as, for instance, promoting local digital content and services, and whether they can be seen as constituting a coherent policy framework. But the flip side of this is, as you might expect, that's not without its challenges. And so our speakers will also discuss the coherence of these provisions and what ways might exist of resolving any such conflicts, if there were any. And to that end, each speaker will give a dedicated intervention of about 7 minutes, and we'll go digital first, I think, as it befits the issue. So Raymond Onuoha will go first, then we will have Kolofelo Kugler on the services protocol, then Jonathan on competition policy, and lastly we'll come full circle back to Kolofelo on intellectual property rights. That'll be taking us into halfway into the hour that we have together. Then there'll be a little bit of a moderated discussion between the speakers to react to each other's interventions. And then we'll be very keen on opening it up to general audience Q&A in the end, and have at least 10 minutes, if not 15, for your questions at the end. The interactive element of that webinar is really important to us. So I think the chat is open. As the speakers go along, please do post your questions into the chat, where I will then put them to the speakers when the time comes for general Q&A. When you logged on, you will recognize that that webinar is being recorded. So we take it that you are okay with that. Without further ado, because we are all sort of waiting really to hear from the speakers, Let me introduce our first speaker. Raymond Onoha is a technology and policy scholar and consultant who works on technology innovation in developing countries with a particular focus on Africa, and the institutional and policy challenges of such innovation in a digital economy. His expertise on technology innovation encompasses areas such as digital transformation, including digital public infrastructure, internet and data governance, and AI policy. Raymond's currently a fellow at the University of Oxford. He's got a Weizenbaum Fellowship in Germany, and he's also a postdoctoral fellow at the WITS Institute for Social and Economic Research in South Africa. Raymond, the floor is yours.
Thank you very much, Ingo. Can you hear me? Can you hear me?
Yes, loud and clearly. Go ahead.
Okay, thank you very much for an introduction, and thanks to CEP for the opportunity to contribute to these discourses, in particular with the channel of this webinar. For me, looking at the AfCFTA Digital Trade Protocol, of course, still in negotiations, still in draft versions, but makes for timely interventions in terms of looking at some of the issues around its coherency in the realization of the AU vision of a digital single market. Some key issues come to mind for me, more particularly if you look at what the current research is, you'll find that it's just about 1% of the digital marketplaces in Africa that are responsible for over 60% of the total marketplace traffic across the continent. And so this is just a small number of platforms. These are often referred to as the super platforms that dominate the market in terms of traffic, in terms of user engagement. And these super platforms are largely global foreign players, the Amazons, the eBays, and what have you. But of course, there are some local players that are making some significant strive into those market arenas, like Nigeria's Jumia, South Africa's Takealot, and a few others. But these super platforms in general, they capture a significant share of the total marketplace traffic across the continent. And so within the context of Africa's digital marketplace, there are key issues of interest for me. One is the issue of market concentration. Of course, Professor Claren will raise some pointers in addressing some of these dynamics when he talks about the competition policy protocol, where a few players are dominating the market due to their early entry, better infrastructure, global scale resources. These lead to network effects, which is a key attribute of the platform economy, where due to their relative size, these larger platforms, they keep attracting more buyers and sellers and reinforce their dominance in the marketplace. And so this poses significant challenges for smaller platforms, especially for the mostly local African digital marketplaces. These emerging marketplaces then often struggle with issues like infrastructure deficits, also congruent with the region's infrastructure developmental stage from a technology perspective. Limited capital, lower consumer trust, based on how popular or not, of course, network effects issues that I've already raised prior. And it makes it generally difficult for them to compete with these established market leaders. So what this situation means for me is that with this significant concentration of marketplace activity in Africa, more local digital marketplaces would need to be scaled if African countries want to or are incentivized to successfully engage in continental digital trade in general and e-commerce transactions in particular. Of recent, the WTO's ministerial conference recently extended the e-commerce customs duty moratorium for another 2 years, providing another short reprieve for these global digital service companies from the imposition of tariffs. Within this renewal, however, there are still calls on how to level the playing field for developing and least developed country members to advance their digital industrialization, especially in response to long-standing complaints by some countries, including African ones, that the moratorium deprives developing countries of significant customs revenue on e-commerce imports, such as media, professional services, and the likes. And within that cycle, that vicious cycle perpetuates the digital divide, affecting the developing and least developed countries. But on the upside as well, as tech markets elsewhere in the world mature and saturate, of course, investor attention is turning to Africa as a growth frontier. So there is still that strong case for strategic direction to ensure that as it advances, Africa's digital trade landscape will contribute more significantly to global growth and development. In recent years, this strategic direction has emerged in the vision of the AU Digital Transformation Strategy 2020 to 2030. There are some sub-regional policies as well, like the Commercial Digital Free Trade Area, national initiatives like in Nigeria. 2 years ago, the 2022 Startup Act was initiated within Nigeria. But in particular, at the regional level, the AU Digital Transformation Strategy includes the goal of creating a digital single market on the continent and identifies the AfCFTA as a valuable tool for achieving this. A mandate for exactly that in operationalizing that has been established with the decision of the AU Assembly to incorporate a digital trade protocol. The digital trade protocol, also referred to as the e-commerce protocol within the AfCFTA. The DTP is within this framework, of course, an ambitious, comprehensive policy tool designed to facilitate digital trade across the region. As it stands, negotiations, of course, ongoing. There's a breadth of issues they are being considering since 2022, I think. If you look at some of the drafts that I have seen beyond the preamble, about 52 articles, about 11 parts, covering primarily digital trade and administrative issues. Part 1, general provisions around definitions, objectives, scope of application, right to regulate. Part 2, market access, treatment of digital products, including some of the critical issues and provisions around the annexes on rules on origin, custom duties, of course, in particular, and non-discrimination of digital products. Part 3 deals with facilitating digital trade with electronic trust services, electronic authentication, and the likes. Part 4, issues around data governance, encompassing cross-border data transfers, protection of personal data, data localization, and innovation. Part 5 deals with business and consumer trust issues around source code, cybersecurity, online consumer protection, and the likes. Part 6 deals with digital trade inclusion, micro, small, and medium enterprises, of course, that make the larger percentage of the marketplace within these ecosystems. Digital innovation, entrepreneurship, digital skills development as well. Part 7 deals with emerging technologies and innovation, including advanced technologies like AI, fintech, and ICT in general. Part 8 deals with institutional arrangements for providing the Committee on Digital Trade. Part 9, transparency with provisions on publication of information, open government information, notification, and the likes. Part 10, capacity, technical assistance, cooperation issues are dealt with in that section. And the last part, 11, the final provisions that includes issues around the coherency and the relationships between the DTP and other protocols such as the competition, IP, and the other protocols within the AfCFTA agreement in itself. Dispute settlement as well, and other annexes with regards to entry to force application and the rest. So this is quite comprehensive. And so the full implementation of such comprehensive digital trade provisions is expected to significantly improve the trading conditions in Africa, like you've mentioned, Ingo, in your introduction. However, there will be issues that are very new to many of the negotiators, and in some cases will relate to issues that have attracted considerable controversy in the context of multilateral WTO discussions on digital trade, in particular, such as the e-commerce moratorium issue. Because if you look at it aside the AfCFTA, only about 9 African countries are signatories to the JSI on e-commerce so far. Benin, Burkina Faso, Cabo Verde, Cameroon, Cote d'Ivoire, Gambia, Kenya, Mauritius, and Nigeria, in addition to the Morocco and Kenya-US free trade agreements. So it will therefore be important to ensure that negotiators are equipped with a rich breadth of evidence-based analysis on the economic and legal implications of different negotiating decisions and are able to bridge some of these key knowledge and awareness gaps. So in that sense, the DTP could provide a blueprint for Africa's position on digital trade rules in the global context. This is particularly important as African countries have taken different positions on digital trade issues at the WTO, while, for example, the African group is opposed to the introduction of new multilateral rules on e-commerce. The 9 African countries that are signatories to the JCI are involved in the JCI e-commerce negotiations on the other end. So beyond that, enforcement capacities must also account to ensure that particularly more ambitious negotiated outcomes translate into transformative change for the digital trade on the continent. Overall, for me, the DTP can provide a framework for the convergence of domestic and regional policies. There is a large list of issues like I've talked about, but at the same time, there's a wide range of best practices in global bilateral agreements that could be drawn upon. Yeah. There is also finally the question of how deep member states will want to commit. A deep agreement, for example, with binding and enforceable provisions could provide a significant boost to continental integration in general and the digital economy in particular. There are, of course, significant challenges based on the different levels of readiness to commit and implement the provisions of the protocol. At the same time, the DTP, when coherent, could provide a guide as countries design their policies and institutions in line with the continent-wide efforts to realizing a single digital market. So that would be my first intervention with respect to the DTP. And
thank you very much, Raymond. That's excellent, and of course, it raises a couple of issues that we can discuss further, sort of in our moderated discussion. But I'm sort of in the interest of time, I'm sort of keen to move on. Jonathan, are you all right if we move on to you? Because I don't think Kolo is here. So we would move on to Jonathan Claren, who's Professor of Law and Society at the University of Witwatersrand in Johannesburg, South Africa, where he has served in several leadership roles, such as Dean of the Law School and Director of the school's Mandela Institute. He has also served, I should say, as acting judge on the High Court of South Africa in 2016. So his areas of expertise are competition and regulation, migration and citizenship, and socio-legal studies. For instance, he has written a book recently on the origins of citizenship and nationality in South Africa. However, today he's got his competition policy hat on. And so I'd invite Jonathan to please take the floor and tell us about the competition protocol of the AfCFTA.
Okay, great. And oh, actually, I see our colleague has just joined, but I'll keep going because I've been given the chance to put competition slightly in front of trade, which was a topic that we were jesting about whilst we were preparing.
Without prejudice.
Yeah, sure. So, but I think they really work together, of course. So I think one point that's important to recognize for some of our persons in the audience is it may not be the first time that one has heard the kind of grand market plans for a continent market in Africa. These have got a long history, but the AfCFTA is really arguably quite different, in part because of the time in the world economy that we're putting this idea forward and this set of institutions together with the ideas. And maybe the digital is actually really part of that. But I think also the way it's being gone about. So for instance, competition and IP investment, it's really a multifaceted enterprise. And the idea, which is the idea of this webinar that CEP's put together, is really around that idea of coherence. I think we're trying for a kind of policy coherence where it's not necessarily consistency in the sense of uniformity, but certainly working together in a synergy and a rational policy way going forward. So to speak for competition, there's really been certainly a growing recognition on the African continent and at continental level about the role of competition law being at the heart of making markets work, as some of the scholars have been pointing out, making market economies themselves really functional. And that's partly through eliminating the kind of anti-competitive and restricted business practices that otherwise can easily arise, thus kind of promoting market efficiency. And it's been important to add in the African sense, partly because of the small economies, the pro-competitive gains can be factored into the calculus beyond the trade and services kinds of gains. Hard to do that, I know, from the economics and the modeling, but that's definitely part of the vision that's here. Of course, these protocols need to still be put into, to be received into the legal systems and the enforcement systems and the political economies of the various, I think we're on 54, 55, 56 jurisdictions that we count in the African Union. And that's absolutely going to be crucial for the full realization of the benefits. So for the protocol that I'm speaking about, which is definitely a phase 2 protocol, it is distinctive, as I said, that we've got this. It was part of the vision from the beginning. We're beyond draft. We're moving into ratification, etc. I should give some idea of the state of play in the sense that there are competition authorities across the continent, but it is really quite variable. There's more and more studies and that are coming out on this. We've got some, whilst it's probably fair to say for all the economies of all the jurisdictions of the African continent, they are small, even Nigeria's like Raymond's and South Africa's like mine. There nonetheless are differences between the others. You see some states without any competition law or competition authorities. You see others with a law, but no authority. And you see others, and not just South Africa, with real competition laws and real authorities. CAK, the Competition Authority of Kenya, has actually, we were just at a conference and they are actually, the South Africans don't always like to hear this, but they're leading the South Africans in certain aspects, that's fair to say. Generally, competition law on the African continent is a little bit more like some of the, well, it takes into account some non-financial interests, that's only fair to say. So there is some factoring in, it's called public interest factors, and it's probably a topic for another webinar, exactly how that goes. But where we are concerned about inclusive economies, I think that's an important point to make. I'll just try and make 2 more points. One is, because I think our colleague has arrived and she's really the headliner here. But one point is that in the drafting and the design of the competition protocol, when these different competition authorities at national and at regional, or you might say in the African sense, sub-regional level, meaning like Eastern Africa or whatever, there were 2 choices. One was a super ambitious choice, supranational kind of thing. The other was a little bit more recognition of the multi-layered. And I think it is fair to say that the appreciation of the diversity and the overlapping layers of jurisdiction is evident in that protocol. There's a lot to go in terms of implementation, but at least at a design level, in principle, it's there. The last, Ingo, can I just make one more point before handing over?
Yes, please, go ahead. One.
Yeah, so I haven't really spoken about the content of the protocol. It's to some extent standard, although there's quite a lot, obviously, to talk about with the specifics, but there's 2 elements that are really important for our discussion here today. One is what you might, I mean, maybe we'll look back and say this is part of a new standard, but there is a gatekeeper clause in the competition protocol. So I'm just going to read that out here. Gatekeeper meaning the term used is gatekeeper. Gatekeeper means an undertaking that has a significant impact in the market, operates a core platform service that serves as an important gateway for business users to reach end users, enjoys an entrenched and durable position in its operations, or it's foreseeable it will enjoy such a position. So there's a explicit recognition of gatekeeper platforms, which isn't there in the South African Competition Act, which was drafted at the end of the 90s, for instance. And then Article 11, which actually uses, I'll probably get a chance to talk a little bit more about that later, but uses the gatekeeper concept. The other important point to mention is that there's a separate and distinct concept from the usual one of abusive dominance, and we're now talking about a different beast, abuse of economic dependence. So that's in Article 11, and that raises, I think, additional enforcement or policy muscle from the competition point of view. So let's leave it there at the moment. Thank you.
Yeah, thank you very much. I mean, it's just so complex and so interesting that, you know, it's really hard to keep to 7 minutes. I appreciate your discipline, Jonathan. But you made a couple of really important points, including the extreme heterogeneity of the institutional setup across what is supposed to become a single market. So that's certainly a huge challenge to coherence. We've got Kolofelo Kugler with us. Welcome. She's gonna talk, I think, if you could take it together, Kolofelo, about services and intellectual property. Let me very briefly introduce yourself. Kolofelo Kugler is a counsel at the Advisory Center on WTO law in Geneva, which involves litigation and providing training and legal advice on WTO law. She was a PhD fellow at Lucerne in Switzerland, where her research was on digital economy and AI regulation issues. And Kolofelo has actually advised the AfCFTA Secretariat on the digital trade protocol negotiations as a legal counsel, and so she knows these issues really firsthand. So we are really glad to have you. Please go ahead and, you know, if possible, you know, deal, you know, any way you see fit with both services and IP, maybe together in 10 minutes, if that was at all possible. Floor is yours, Kolofelo.
Yes. Thank you, and thank you all for your patience. So as introduced by Ingo, I'm going to be dealing with trade and services or services related issues, and then touch upon the IP issues, which hopefully we can also expand upon in Q&A. And so I just want to situate services and digital services in Africa within the conversation before delving into specifically some of the provisions of the Trade and Services Protocol, and then discussing some of the potential, things that we should consider in implementation from a perspective of complementarity and also conflict in the two agreements, namely the Digital Trade Protocol and the Trade and Services Protocol of the AfCFTA. Obviously, what we're seeing as in Africa, as we see in other economies in the world, is the servicification of economies. So essentially now services account for 53% of value added in Africa and 34% of total formal employment in sub-Saharan Africa. When you look at services as compared to manufacturing, we see that services workers are on average more educated, they engage in higher skilled occupations, and also interestingly, more likely to be women. In fact, 40% of services workers in Africa are women, which is twice as much as in manufacturing. And some of these services sectors that are concentrated, we see education and also and banking and financial services. So I think services in total provides opportunities for all Africans and also including women and the youth. And I think digital services, when you move into that, even expands the opportunities available and is even more inclusive. And I'll just drop a few figures before going to the protocol of trade and services. We see that by 2050, the potential contribution of digital services in Africa should raise to 712 billion, or 8.5% of African GDP. And also, when you remember that Africa has got this youth bulge, which northern countries or Western countries or even Japan is struggling, we see that 1/3 of the world population of workers will be in Africa by 2075. And investing in the digital gap in Africa, and especially by training youth and women, could also set up Africa to be the world's major exporter of digital services. So digital services really does provide Africa with vast opportunities. I'm just going to touch upon a few things in the trade and services. So as we know right now, trade and services was in the phase 1 negotiations, meaning that this protocol entered into force in May 2019, so it's in force. What we're saying is that all of the trade schedules have not come in, but what was committed to was 5 sectors. So business services, which includes professional services and computer and related services, communications, which includes telecoms and audiovisual services. So think of Netflix, think of radio, think of all of those media services that we are consuming. Finance, of course, banking and insurance, and also the 2 remainder are transport and tourism. So what we see in the services protocol is very sort of interesting, and it's also quite standard in a way that it looks like the GATS in the WTO. We have most favored nation principle, we have national treatment, and we also have commitments to market access. But of course, as we know, those commitments to national treatment and market access are predicated upon what members have committed in their services schedule. And this leads me to those potential issues or potential conflicts or areas of convergence between these 2 protocols. So obviously, the number one probably issue that would be brought up is the level and depth of commitments. So I do not have all the member schedule, but really looking at the research that has been done between FTA commitments, vis-a-vis WTO commitments, and especially in African context as well, we see that African countries tend to commit less in FTAs than they do at the multilateral level, for reasons that are interesting as well. And I do not suspect that this will be much different in the AfCFTA context, although we only are dealing with 5 services sectors. What we see in most schedules is that we see the highest number of commitments in the consumption abroad, meaning mode 2. Sorry to get into the technical speak, but this is how services are scheduled. So the next would be in mode 3, which is a domestic presence in a country. So basically investing FDI in a country. Mode 1 is the next, which is cross-border provision of services. And then lastly, mode 4, which is the movement of professional. And we can really go into depth about this, but in digital services, we're essentially talking about mode 1, essentially, which means provision of services across border. And we see low commitments generally by African countries, and also restrictions to the effect that they would be unbound, meaning there's no commitments, meaning that they're allowed to include any restriction on trade and services, including trade and digital services. Now, when you look at this, sort of contrasting to the digital trade protocol, I'll just draw upon one example, which is the cross-border data flows provision in the digital trade protocol, which essentially said that state parties must allow cross-border transfer of data, including personal data by electronic means. There is an exception for public policy restriction for reasons, but of course, this is really a hard commitment. To the extent that African countries have not committed a certain sector, or to the extent that there is a limitation of data, this would be not would be in conflict with this specific provision. And so we do see areas of these 2 protocols that could potentially sort of clash. And this is the thinking that has to go into the implementation of these 2 protocols, is how do we reconcile some of these issues? Of course, it must be noted that Article 44 of the Digital Trade Protocol specifically says that in the event of any conflicts or inconsistency between the Digital Trade Protocol and any other protocol of the AfCFTA, that other protocol takes precedence, meaning that if there's any clash or inconsistency between the Digital Trade Protocol and the Trade and Services Protocol, the more restrictive regime under the Services Protocol would prevail. And so these are some of the issues that in implementation, in thinking about how do we reconcile these agreements, we have to be thinking around that as well. I'm just going to mention one more thing in digital trade and services, and I'll run into the IP issues very quickly. One of the things that it was interesting to see that there was a thinking, a matching, a complementarity of payments, right? Obviously, services, banking services are important, obviously, in services, standalone services themselves, but also in digital services. And there seems to be some, sort of match up in that there is a commitment under the Digital Trade Protocol and, of course, under the Trade and Services Protocol to ensure that there are no restrictions on payment, which is a very positive thing to see this type of matching, this type of thinking across the board, in policymakers and negotiators to ensure that payments happen on the continent, because e-commerce will be a driver and cross-border e-commerce will be a driver, hopefully, in Africa in the years to come. So I will stop there in digital trade and sort of services as well, and just kind of mention a couple of things that perhaps we can mention and we can expand upon in Q&A. Now, one thing that I think has been not adequately expanded upon in the African agenda is intellectual property, specifically in the digital age. And I would like to sort of couch this in terms of these advancing technologies, specifically in artificial intelligence, where around the world we see a lot of concern about how these technologies use proprietary information, proprietary data, including that, but also just in terms of the creative industry in Africa, which I think is a place where Africans do have a comparative advantage and should be used to their advantage. And so we see that in the IP protocol. I just want to focus specifically on copyright because we do have other IP rights within the protocol, including trademarks and trade secrets, et cetera, patents. But I think for this context of this conversation, copyright, is front and center. We do have a commitment in the IP protocol that state members or state parties shall protect copyright, but that's just one statement couched in between a whole number of exceptions, meaning the balance provisions in this protocol. Yes, of course, I think it is very important in developing countries where there is a balance between perhaps state parties' ability to limit IPR. But I think in this specific context of digital trade and advancing African IP and enhancing the digital, even creative economy, we have to be thinking about how do we protect African IP, not only within Africa, of course, but of course within the whole wide web. And when we think about the internet, those transactions are not only limited, obviously, to Africa. This is a borderless technology, and in sort of enhancing what we have, our natural sort of advantages, we have to be thinking more proactively about sort of trying to make value and grow the economy, the digital economy, the creative economy through proactively protecting IP, specifically in this case, copyrights. I will stop there, and I very much look forward to your questions and comments in the Q&A session.
Super, thank you very much, Kolofelo. Including keeping to time whilst covering two complicated issues. So thank you very much. I suggest this is an opportunity now for us to react to each other. I'd have a couple of questions, but if any one of you, Jonathan, Raymond, or Kolofelo, wanted to react to each other, please go ahead. I'd have a couple of questions, really. Maybe I'll just make a start, Jonathan. You've already hinted at the heterogeneity, both conceptually as to the existence or not of a competition law at all, and then of there being an enforcement, a competition authority. And I think the goal of the competition protocol is actually officially to manage the interrelationships of the competition regimes and the sectoral regulatory laws. Now, that's famously difficult. How do you see this play out on the ground in Africa? Are there discussion forums amongst the competition authorities for at least an informal exchange? Is the Pan-African market idea becoming part of their remit, which would be a lot more ambitious? How do you see this playing out?
Okay, let me just go straight on that. So I think that plays a little bit into the drafting history that I was bringing up for the competition protocol. And the, these competition authorities are, okay, the South Africans started in the 90s, but I can't remember exactly the Kenyans, but the Kenyans have been going for 20 years. So it's really, it's quite a mature policy community. So to answer one part specifically, Ingo, the African Competition Forum, ACF, is a association of competition authorities, national competition authorities, but there's a level of discussion with regional ones as well. And there's a functioning policy community there. And that's actually extremely optimistic for the issue that we're talking about. And then one point would be that it is fairly clear then that the AfCFTA and the competition protocol can do work of gap filling, where there are gaps that aren't being filled already by sub-regional. And that sort of tiered sense, I think really is in there. Where there's maybe a little more concern, as I would look just on the ground, is, I'm coming from, I teach competition law, I'm comfortable in that area. So if it's competition authorities leading, there are telecoms regulators, and often those two domains, this goes back to a standard competition issue between competition regulators and then sector regulators. So I think we've got that same dynamic playing out in this digital trade area. And what that means is when I look at some other African jurisdictions, you see telecoms moving forward in a way that maybe doesn't appreciate, in my view at least, as much of the competition dynamics as could be there. So I hope that answers well enough.
I see. Yeah, that's very interesting. Kolofelo, you've got your hand up. Please go ahead.
No, actually, Jonathan just covered the question that I wanted to ask. It's more about institutional collaboration, and I think he did that very well. Thanks.
Yeah, I think it does speak in a way to one of the questions we got in the chat, and I'm sort of merging or blending a little bit now, sort of the internal Q&A with the audience Q&A. The question was highlighting that some subsets within Africa, COMESA, apparently have a strong competition authority. And so, how, I guess the question was directed at you, Jonathan, how you would see actual integration playing out. I think you answered that up to a point, but maybe we can take it one step further. To the extent that there is a functioning policy dialogue amongst the more mature and developed authorities, do you see an Africa of two speeds here? Is there a danger that other jurisdictions or economies who are institutionally and economically maybe less developed than Kenya or South Africa or some of the more advanced economies are sort of being left behind in that dialogue?
Yeah, I think it's a danger of even almost three speeds. If I go back to that 2x2 diagram of some jurisdictions without a competition law or a institutional authority, and then some where regional, and COMESA is indeed one of the stronger, either depends how you want to classify it, but regional or sub-regional organizations, they're picking up some of the gaps at, say, Southern and Eastern Africa. But then there's another level of, obviously, the continental level. So, this is a there's a lot more road to go. And one dynamic that's beginning to, I think it's fair enough to say, that's beginning to play out, Colafella was talking about institutional collaboration. I think, you know, we're beginning to see sort of even staffing kinds of issues where good staff from national is beginning to go to sub-regional. I would imagine when the AfCFTA gets actually going, we're going to see some of the good staff going up there, and it's all within a, you know, kind of normal range. But when there is a kind of developmental deficit on the African continent, then, you know, those kinds of issues become very important to take a look at.
Thank you. That's clear, Jonathan. I mean, all of you, in some sense, hinted at sort of the upsides of all of these protocols. You know, some look, you know, quite good, quite standard in a way. Some said, especially in competition, I guess, with provisions on the abuse of economic dependence and gatekeeper provision, go actually well beyond what is in many jurisdictions law already. So it's almost a leapfrogging. But we haven't talked so much yet about the problems. So I was wondering whether I can just throw that question out there, whether any of you saw specific issues, maybe specifically in the digital trade protocol, but maybe more generally, that conflicts with the objectives of establishing a single market or a single digital market, and perhaps especially with the goal of the development dimension here. And I'm paraphrasing a question here that we got from someone in the chat, whether the development dimension is adequately captured in the digital trade protocol in AfCFTA. So if anyone wanted to go first.
Okay, I can go.
Yeah, please, Raymond.
Yeah, so I think it's a bit of a conflagration to match the two ends. In terms of inconsistencies, I have some thoughts around some of the issues with the digital trade protocol. But just to answer the audience question directly with respect to the developmental aspects of the digital trade protocol and its sufficiency. Of course, while the DTP is addressing several key aspects of the digital trade, like I earlier highlighted, significant questions remain about the adequacy of its development provisions. If you look at the protocol from a developmental perspective, it deals with issues around promoting digital trade, reducing barriers to trade, fostering cross-border e-commerce and digital services. Of course, these, when coherently implemented, can spoil general regional economic growth. There is support for SMEs, with the protocol emphasizing improving access to digital platforms and technologies for smaller businesses. It recognizes the need for investment in digital infrastructure to address connectivity gaps, particularly in underserved areas. There are capacity building and digital skills development commitments with respect to the protocol. But some key gaps with regards to development and inclusion, the protocol does not explicitly set up any development benchmarks or timelines to measure progress in addressing some of these key inequalities with respect to digital trade readiness among member states. While the protocol promotes inclusivity broadly, there are also no specific measures targeting women, youth, rural populations who are often underrepresented in the digital economy. There is also an over-reliance on market-driven solutions. So by focusing heavily on trade liberalization, the protocol may unintentionally favor well-established and resource-rich digital players, leaving smaller or less developed economies at a disadvantage. So let me leave it there for now.
Yeah, thanks very much, Raymond. Colafella, you had your hand up.
Thank you. So, I mean, I guess I'm going to be a little bit controversial, and this is my own opinion. So
good, go for it.
Really, Kulu and no other institution or anything else she's affiliated to, I might lose my job. But I would like to imagine us on another viewpoint. I'm of the opinion that perhaps the thinking around trade liberalization or intra-Africa trade liberalization needs a rethink or reshape. Because ultimately, what is it that we are doing? We are trying to foster intra-African trade by decreasing barriers to intra-Africa trade. And so why would we want to adopt or undertake commitments that do not do that? I'm not saying that, all economies should open up everything all the time. And this is not the purpose of the AfCFTA, and it was not conceived in that way at all. I think variable geometry is very much baked in the AfCFTA, including the fact that the Digital Trade Protocol has a 5-year implementation period. So it's not going to be, implemented anytime soon. But I think we should be imagining pushing us forward and using the time and the available resources to us, which are plenty, as to how do we get to ourselves to the place where we can trade with trust, with security, with data flows, but also knowing that national imperatives and priorities are protected. And I think this is where I would like us to think about how do we increase trade within Africa. It's not a project about any other people. And I think conversations of sort of outside influencers or entities, they do belong, but not always as the very first thing. How do we block out Amazon? I think we should be reframing as to how do we grow Jumia? And so this is really my own personal opinion about this, and I'd be happy to hear anybody else's opinion on that.
Yeah, thank you, Kolo. I think you're hinting at that rightly, I guess, again, personally, that you cannot really get to a single market just by trying to drop barriers. It does take something more proactively and more positively. Can I put a question on? Yeah, Jonathan, go ahead, go for it.
Yeah, if I can just come in on the back of what Kolofelo has just mentioned. So there's a bit of South African experience around a market inquiry that the Competition Commission, this is national, but it, I think, relates to the point that she's making, where it was an e-commerce, and the Googles and the Amazons and the Apples were kind of kindly invited to come, and actually a couple of them kindly declined. And then the enforcement authorities kindly re-invited them and said, and they actually did come. But the point is that at one point, the draft recommendations were effectively for a Digital Markets Act, at which point those very big non-African elephants kind of stomped, and that recommendation went away. But the recommendation that I think maybe she's pointing to, this is not Jumia, but this is Takealot. It's in a dominant position from a competition point of view. But the authorities were very comfortable with putting on greater inclusivity requirements towards onboarding. There are platforms, call them platforms, but really e-commerce kind of almost mini platforms in locations and townships. And I think there's a good story to be told there about carefully calibrating what one can do and what can't do towards building an inclusive economy, even understanding an unbalanced global economy. So I just wanted to add that in.
Yeah, thank you, Jonathan. It's a very nuanced answer, which I think does a lot of justice to how things unfold on the ground. We keep get questions in the chat, so I'm quite keen actually to put that to the panel. One is actually, I think, tying up a telecoms technology question that Jonathan was hinting at, which might be moving in one direction, or at least at a different speed to technology. The question is that a lot of the digital market and progress in the digital market does rely on digital technology, and whether or not that is a boon or a bane to implement or arriving at a single digital market. that reliance on mobile technology. Have you got any takers for this? I mean, is it something? I know, yeah, Raymond, I was thinking of you exactly because the technology question. Go for it.
Okay, I think in the sense of reliance on mobile first technology ecosystem, I'll see it more of as an opportunity. We always out leapfrogging as a significant opportunity in the development of its digital ecosystem. So when you look at the high mobile penetration as a foundation, ubiquity of mobile phones, Africa, for example, has over 650 million mobile subscribers. So with mobile technology serving as a primary mode of internet access for most Africans, it provides a strong foundation for connecting people. And when you connect people, you connect businesses across borders. So I see it as an opportunity in implementing a digital single market in that sense. So when you now relate that to some of the key sectors like e-commerce, is heavily mobile driven. Mobile platforms have enabled significant growth in e-commerce, digital payments. For example, within that space, M-Pesa, a shining light in that sense, and other services that are critical to digital trade. So the mobile base as a foundation can help leapfrog infrastructure gaps, allowing many of African countries to bypass traditional fixed line infrastructure challenges, which are significant relative to other regions in accelerating access to digital services. So mobile-based platforms, they provide opportunities for interoperability, potentially enabling greater regulatory alignment within the digital single market. It also we can leverage the DTP as a policy within the mobile first economy as a vehicle to promote inclusion. By you can prioritize mobile-based digital services and platforms, which will ensure that these are accessible and scalable across across member states in that sense. So, but some of the issues, even with that foundation, could relate to the significant urban-rural divide. For example, mobile network infrastructure in Africa concentrated mainly in urban areas, so rural regions, limited access, so unequal opportunities for participating in the DSM. And it will have implications for spectrum allocation costs and any fragmented regulatory frameworks in those perspectives. So it's just both sides of the divide. I would just like to shed some light in those respects.
Yeah, thank you, Raymond. I think we're coming up to the hour. I mean, time flies. So let me try and marry two questions from the chat, which in my view actually really go to the heart of the issue if we deal with something as heterogeneous as the African jurisdictions, with an opportunity for each of you to make a 1-minute final statement. And the two questions I would like to put to you combined revolve around variable geometry, right? We've got a couple of provisions there. We have provisions that make allowance for variable geography. You know, there's nothing that would prevent individual state members to go further. At the same time, everyone needs to respect special and differential treatment, but, you know, there's of course an MFN requirement. So is that, again, you know, a disadvantage or not? And could there be a role for any of these subset trade agreements to protect rather the juniors of the third world, as a question puts it, in the face of global competition? If you could speak to that or combine it with anything that you wanted to say as a final statement, 1 minute for each of you. Kolo, you are nodding. Would you like to go first?
Yes. So I'll just address the variable geometry question. And I think you just mentioned it, Igor. There's nothing in the protocol, in trade and services, or in any of them that says that member states cannot go further than what they wish to do. Of course, member states or state parties can liberalize, can do more. I think of them sometimes as sort of these minimum standard agreements, where there's a certain level that we're interested in adhering to and achieving. And if you want to do more, go for it. And I think this allows countries with different levels of capabilities, of course, with different levels of ambitions, to do what they think is the most adequate, you know, and in their national interest. And just in closing, I think we do have a very huge moment, huge opportunity in digital services and digital trade in general in Africa. I think we need to be thinking more about, the infrastructure, not only obviously roads and bridges and obviously the broadband technology and everything, but also the regulatory infrastructure, which I think is really the next step. How do we get the data protection regulation on board? How do we get the cybersecurity regulations on board and working, including in the institutions that are supposed to be taking care of the data that runs the entire economy? Thank you.
It's a huge agenda. Even the digital trade protocol, which is in draft mode itself, then calls for annexes on cross-border data flows and on financial technology and all the rest of it. Thanks very much, Kolofelo. Raymond, what do you go next?
Yeah, thank you. For me, resolving some of the inconsistencies you've highlighted, of course, will require, there's no magic wand to that. It will require multi-pronged approaches. There will be need to adopt progressive policies that align with global norms, creating clear and fair rules, and also support member states in their implementation, which is the critical part. Such measures will not only avoid creating new trade barriers, but also promote the growth and competitiveness of Africa's digital economy. By removing some of these barriers and ensuring fair competition with respect to some of the issues that Professor Claren has highlighted, African nations can benefit from more accessible, innovative, and competitive digital markets. And so when you target protections for local players, for me, with mechanisms that attract and integrate foreign investment, the AfCFTA protocols can ensure a balanced digital economy. So for me, in summary, even when an agreement is reached, there are significant implementation challenges to be faced. A poorly or partially implemented agreement will be ineffective in achieving the objectives of the AfCFTA. So effective implementation will involve support to address the lack of information that market operators face in relation to some of these relevant provisions that we've talked about for the AfCFTA to be truly beneficial at scale. Thank you.
Thanks a lot, Raymond. Jonathan, over to you.
Yeah, I think I'd largely concur with my two co-panelists there, and to specifically say for sort of implementing or sub-AfCFTA agreements to be addressing issues such as juniors, I think that really is an important move. And I guess basically having the AfCFTA, now that scaffolding and structure is there, then there's a lot of different places where work needs to be done in different ways. And it's really a step towards getting clarity and developing the evidence and then developing the solutions there. So, yeah.
Thank you very much, Raymond. To very briefly conclude from my end, so there are huge opportunities, right? And in some sense, that ties back to the very optimistic estimations of what AfCFTA could deliver if it was fully implemented. And that's exactly kind of the ambitious scaffolding that Jonathan was just mentioning. It's there, but what are we going to do with it? Kolofelo was saying that digital trade might provide major employment opportunities, especially for women and perhaps others who have not benefited from trade, from conventional trade as much. But of course, it will not work without outside, meaning extra African FDI, which we call platform FDI, because a lot of the African digital market is just served not by African content and not by African providers, and we would want to see this share grow. But practically, I think a lot of this will have to work with outside FDI. And I think a key point that Kolofelo was making is that it will require positive rather than negative integration. Just tearing down the impediments would probably not work. It does require trust building and dialogue institutions. And what I heard from Jonathan about really there being a function policy dialogue as between the authorities, sounds quite encouraging. But that's only quote unquote competition policy. Right now, the different sectors need to talk to each other, right? Financial oversight regulators need to talk to other kinds of regulators. And that's a challenge even in the most advanced economies in the world, let alone Africa. Let me stop here. Let me thank everyone on the panel for sharing their insights and their wisdoms. It was fantastic to listen to all three of you. And let me hand it back to Hildegunn.
So on behalf of CP, a huge thanks for your insights and the food for thought that we have taken away from this. And just a huge thank you also to the audience. And there are some questions in the chat still, so we can share them with the panelists, and you may answer them privately if you like. And then finally, the next webinar in this series will be 20th of February, and it will be on the culture industries. So again, thank you so much. We have learned a lot.